Okay, everybody, it is me, Gregory Mannarino. It is Friday, February 18th, 2022. Sit back and freaking relax. Actually, people, look, let me start off with this. There's a lot of fear here. And I'm not just talking about in the market. I am hearing from so many of you with regard to this volatility in the market, what we are seeing. But let me say this as well. Just about 6 weeks ago, I did a video where I outlined for you my top 5 trends for 2022. It was almost like, I don't know, go watch that video. In fact, I'm going to put a link in the description of this video to my top 5 trends for 2022. I think you should watch this. For those of you out here who are concerned about what you're seeing, I explained this to you before it happened. I looked back on that video earlier today and I was like, it was prophetic. The volatility in the stock market, I outlined this for you. I said, expect it. The volatility in cryptocurrencies, I said, expect it. Food prices, energy prices, all of it. The things I spoke about in that video, they're happening now. So go again. If you want to see what else is coming, check out that video. Again, link in the description of this video. So, yes, people, this market has been kind of all over the place on global events, geopolitical nonsense, you know that, surging inflation, all this stuff that I believe most of us expected. But again, a lot of fear here. I tried to explain to you yesterday why I think that is. Either you're not in the right spots, you're not hedged properly, you didn't expect it, which you should have, okay? Look, I got your back. I always tell you that. And despite the fact that this morning we got another warning from a Wall Street super bank. Guess who? Bank of America. And they're not too hip on this stock market right now. In fact, they're kind of bearish. And what does that make me do? When I hear all these bears coming out of the woodwork, I get bullish. I really do. I don't see a damn thing coming down the pike other than the major meltdown, which is going to happen at one point, debt market implosion. But let's look at the debt market right now. There still remains a fear trade, meaning 10-year yield lower. We're still below 2%. Okay, a little nudge higher in the dollar. Stock futures, as I am doing this video blog, stock trading doesn't start for about 35 minutes, are slightly lower. There's still a fear trade on uncertainty. The market, like I always tell you, is a demented child that needs to be reassured day after day. Everything's going to be all right. Everything's going to be okay. Seriously. But to me, okay, and to probably 90% of my lions out here, when you see fear in the market, I mean, that's opportunity. I don't know another way to put it for you. So stop with, Greg, I'm so concerned. I understand you're concerned. Believe me. And I read through the emails I get. My email box is like, it's a nightmare lately over the past couple of days. You got to think about why you are so concerned. Where are the red flags that you're seeing? Okay, as I explain all the time, the market is a random walk with an upward drift. Okay, the random walk, that's just something you should expect with regard to the markets. But the drivers remain stable. Period, the end. So with that understanding, we're going to ride this out. I told you how I'm going to play this, okay? I will continue to buy the dips in the market until I see the 10-year yield start to spike in an uncontrolled fashion. As long as the debt market, and again, the 10-year yield is the benchmark. As long as the debt market remains stable, I don't know about you. I know about my lions, though. We will remain steadfast. Okay, we just, you can't just on a whim change a strategy that has worked for years and freaking years, especially when you knew what was coming. Again, please have a look at the video I did at the beginning of this year, just about 6 weeks ago, where I covered the top 5 trends. It's all unfolding exactly as I said it would. Look, making predictions or educated guesses as to what the market is going to do is not that hard. It's just a matter of understanding the dynamics behind it all. It's really the truth. And that, once you understand that, the fear should go away. You got it? Anyway, so like I said earlier, we just got this warning from Bank of America. What is Greg Mannarino going to tell you to do? Ignore it. Just like we have gotten repeatedly last year. I mean, it's insane to me. How many banks warned us last year about the market? And what happened last year? More record highs than history. So when you got a major bank coming out warning about the stock market, I don't listen to it at all. In fact, I don't listen to anybody. I kind of just take in all this stuff on my own, and I give it to all of you as straight as I possibly can. And as I always tell you, am I right all the time? No. Am I right most of the times? Abso-freaking-lutely. Let's look at some other aspects of this market here. WTI crude is now under 90 now. I told you. Once we get a pullback, and we haven't gotten one yet, a real drop with regard to crude, that's not going to make Greg Mannarino happy. I'm going to tell you right now, because all we're going to do is establish a new floor and go much higher. That is going to add to the inflationary pressures in a massive way. With regard to inflation, people, I don't know, how do I tell you this another way? It's going to hit much harder moving forward. And it's all by design. The Federal Reserve is determined to inflate. All the talk, all the nonsense about aggressive rate hikes, tapering, the balance sheet, unwind, it's just all nonsense. Central banks around the world are looking for any excuse right now, any at all, to continue to print. And they're going to. They can say one thing and do whatever they want to, and there's no ramifications for it. Remember transitory. You remember contained. They're never held to account. We all bear the brunt of monetary policy rigging by central banks, none more so than the Fed, but they're never held to account. And I find that extremely disturbing. Again, but you know why? They're the government. They can do whatever they want to do. Now, again, going back to this Russia-Ukraine issue, look, I'll be honest, I have no idea what to make of it. You're hearing all this talk from our retard president and other idiots out here. Oh, attack is imminent. It's going to happen today. We haven't seen anything really. But the market is responding to it, and I am going to stick to my guns, people. This is nothing more than an arms deal in disguise, no matter how it plays out, because global debt must continue to skyrocket because of the way the debt-based economic model is structured, and this is going to lead towards a new arms race. Mark my words on this, and that's going to allow central banks to continue to do what they're doing, but actually more so. They will issue more debt than ever before. They will not be cutting back. Why would they when they have the world by the throat right now? They are fulfilling their goal to be the lender and buyer of last resort. They're already there. We have a global economy that is collapsing. And the propaganda ministry is doing everything they can in their power to convince you otherwise. I mean, you can't make that stuff up. We haven't had one single piece of good economic news in years. And that's just the way it's going to go here. Anyway, so with that said, people, let's look at over at cryptocurrencies under some pressure here. Bitcoin around 40,000, just over 40. But again, one of my top trends for 22. Extreme volatility in crypto. You should have expected this. And in my view, you still need to have this stuff. You can have your own opinion. I know a lot of you do. You'd rather be in gold or silver. That's fine. There's nothing wrong with me. I mean, that's my top most undervalued asset in the history of the world is not cryptocurrencies. It's physical silver. You all know that. But me, you know how I am. I like to be spread out. I believe cryptos need to be in your portfolio, but you make that decision for yourself, and you know why. I told you. We're holding gold, silver, platinum, palladium, and cryptos because in my view, when we get it, and we will, we're going to get a massive sell-off in the debt market at one time, and we're going to see that 10-year yield spike in a big way. And what that means is we're going to see cash move from one set of assets to another. It's very, very simple to understand. I believe the market cap of cryptocurrency is going to balloon. I believe gold and silver are going to reach... I'm almost speechless. I believe... Actually, let me put a perspective on you real quick. How this is going to play out is very, very simple. We are at one point going to get a massive, I'm going to say crash in the stock market. It's going to be just unbelievable. An 80% sell-off is definitely within the realm of possibility with regard to the Dow Jones Industrial Average. I'm going to stick to that for a moment. And there's a reason. Because I think, and I believe this sincerely, we're going to see gold be 2 times the Dow, no matter what the Dow settles at. Let's just throw out a number here. Let's say the Dow Jones Industrial Average settles at 6,000. That means gold would be 12,000. You understand? So that's how I see this playing out. And if you look at, if like I just said, if you see that happen, could you only imagine what that's going to mean for silver? Because I do believe the gold-silver ratio is going to normalize in an epic way. 15 to 1, 10 to 1 in extreme. Let's see where it goes here. And again, the market cap of cryptocurrencies has the potential to probably go up 5-6-fold. So what does that mean for cryptocurrencies? Think about it, okay? I don't trade this stuff. I do not trade metals. I do not trade cryptocurrencies. All right, with regard to the market, I have core positions. You all know that. Positions I intend on holding for a long period of time. I'm really into the banks right now. As you all know, I think some of these banks are well positioned to do very well moving forward. Okay, I'll name them. JP Morgan, Goldman Sachs, and Bank of America, who's warning us today about the market. Duh. Okay, they can warn all they want to. I don't see a red flag in the debt market yet. When I see a red flag in the debt market, I'll let you all know. Sincerely, have you checked the MMRI lately? It actually came down. The Mannarino Market Risk Indicator. Please, people, stop writing to me and telling me it's a crash indicator. I don't know where you're getting this from, okay? You're hearing it from the source. The MMRI, it's mine, I created, is not a crash indicator. It's a risk indicator. And low risk, and right now we're low, moderate, doesn't mean no risk. Even if you were in the green, doesn't mean there's no risk in the market. It's one tool among many that me, my Lions, any of you can use. It's 100% free. There's a link in the description of this video to gauge risk. And risk is a double-edged sword. Like I said, more risk means more reward for this market. And for anyone that's trading this market, you know how I operate. I do not buy options anymore, okay? I am a net seller of options. I trade around my core positions. That's all I do, okay? So even if we get volatility in the market, if you are positioned correctly in risk-on assets, large cap dividend paying stocks, and you're in risk-off assets, physical gold, physical silver, and yes, I believe cryptocurrencies, okay, they're very volatile. You know that if you don't expect volatility in crypto, you have no idea what you're doing or looking at. So I don't want to hear about it. So if you are again in let's say JP Morgan. Let's say you own only JP Morgan stock for which you're getting a dividend payment on it, and you're selling puts against it, way out of the money. You're still putting cash in your pocket even if it pulls back. I can't explain this another way. My Lions get this stuff. Credit spreads, all this stuff is not hard to do. And I do urge you to not be buying options here unless you are, look, buying options is a very, very specialized field. And you got to be so good at it. Okay. I did it for many, many years, and I honestly couldn't stand the swings in the bankroll. I mean, we're talking about up and down like crazy. So that's why I changed around my plan, how to capitalize on the market. But again, there's a lot of people out here, a lot of guys, a lot of girls who are very proficient in buying options, and it's just not my game anymore. All right, anyway, look, people, I covered a lot of stuff with you here. Let's keep our eyes on geopolitical events, the 10-year yield. Let's see how this plays out here. And again, last time, okay, check out the video, my top 5 trends for 22. You will see what I said 6 weeks ago is happening right freaking now with volatility in the market, cryptocurrencies, inflation, energy, food. Go check it out. Link in the description of this video. This guy's out of here. I'll see all of you later. Love you a lot.